reacting to these markets this morning, it felt like I was taking my pet turtle out for a walk. But then midday, the markets really began to take off. There was the idea that there was some positive corporate news that began to push the markets higher. But the bottom line is the markets chose a direction, and it wasn't indecision. And the bulls did what I said in yesterday's video, which was to break out and to break higher. Now, I'm going to give you a new prediction on the SPY today because the SPY has printed a buy signal on the daily time frame, and we've been watching as big tech has slowly been creeping up off of its lows, and the bearish narrative of September has been brought into check. And I just want to remind you guys, the markets tend to always do the opposite of what everybody is saying or thinking. And there was a lot of bearishness in September, the idea that this was going to be a rough 4 to 6 weeks ahead of us. But the markets, they did a hard dip. We canceled technically that dip on the SPY, as well as a bunch of other big tech companies, and we've been climbing. Today's move changed everything, and we've had a full-blown breakout. I'm going to show you guys that in the SPY, and with that, I'm going to give you guys the line in the sand, which will be the trigger for us hitting a new all-time high on the S&P 500. I'm going to give you guys that prediction today. We're going to talk a little bit about some big tech, and I'm going to touch on Bitcoin, what's going on there. But right now, everything is melting up in this supposedly horrible, worst month of the year. We went from walking the turtle to all of a sudden the turtle was taken off on its skateboard. Okay, I want to touch a little bit about some of the market movers this morning and interesting news stories. Right off the bat, Google was having a good day. And a couple things I want to remind you. Google always tends to move last out of the Magnificent Seven. It's just coincidental, but in all of my time in tracking the Mag 7, Google tends to move the last. And now we've got Google confirming the up move. And it did it on some positive news. What was the positive news? Well, it's that they were invited to Washington, D.C. to talk about AI and government. And so we know that the reason why Google has been struggling is because of the concern regarding coming regulation and them being a monopoly. And now we've got them coming or being invited to the table by those same government officials to potentially bring AI to the government. Let's just look at that for a moment. The fact is there are very few companies that can bring that level of integration into the United States government, and Google's one of them. So they're a leader in this space, and so the U.S. government needs that type of leadership, and so there is a natural fit there. And I want to remind you of something I said in a recent video talking about Google, is that I didn't believe that the government was really going after proper regulation and breaking up of a monopoly. The government loves monopolies. I told you they were just going to slap them on the wrist. They were just going to pull their chain and bring them under the fold again. I didn't believe they were really looking after us to protect us. I'm sorry if I've become a little cynical on that. But here we go. After all these threats of regulation, now they're being invited to have some talks. And so it's a little bit of a mixed message. And that's the reason why people thought that the government was going to go easy on Google, and they may not be in as much trouble as they had thought, and so the stock has popped. Now, another interesting story today was NVDA, the chip makers, yet again leading the markets higher, and Blackwell product is not as delayed as people are fearing, and that there's going to be a ton of sales in Q4, and they're going to realize all of their goals and ramp back up their profit margin, that this was just an overreaction to a small delay, and that NVIDIA is not a company that people want to be unloading, but rather loading up again. And so I'm going to go into an article there, and we're going to talk a little bit about what a chief analyst says regarding that subject, and I'm going to take you guys into the NVIDIA chart as well. I also want to point out that gold futures were up again today, and that is a reminder to me of a coming recession because there is rotation still. People are going more risk off. And so even though I am bullish on NVIDIA right now, we have to keep an eye on those underlining indicators that are telling us that very soon, around the corner, we are going to have a bigger problem with this economy. Okay, let's talk a little bit about crypto. Crypto is doing pretty well today. We see green across the board. XRP leading the up move this morning. I don't really have the news story there. I noticed that they were doing well. I actually jumped into a leveraged XRP trade and made a little bit of money on that pop. But particularly, I'm going to take you into the Bitcoin chart. And right off the bat, we have continuously stayed above the levels we needed to stay above. And by the end of this week, If we're above 60K on the Bitcoin chart, then I would say that we are back into a bull move. And so that's the level that we have to recover. But so far, it's remaining strong. And what it's doing is it's allowing all of the altcoins to come up. And in particular, on Tuesday, I highlighted the altcoin that I was most excited about, which was SUI right now, SUI. And it has been ripping since Tuesday. And in that video, I said to you guys, when people were asking me, well, Josh, what about Bonk? And what about Doge? And what about ADA? And I said, guys, what about the crypto I'm talking to you about right now, SUI? This is the one that's hot. Consider rolling some of your legacy coins into some SUI. Don't be left behind on the SUI train heading into Wall Street. And in the last couple of days, it's been taking off. But even more important than that, I mentioned the meme coin and the ecosystem that people were going to begin to look at more carefully surrounding SUI. And I offered up the BLUB meme coin, which was brought to my attention by Mark from Tribal Trades. I've got to shout him out. I hope you guys had the opportunity to jump in on that hot play. I knew it was going to be a hot play, and it's turned out to be a real winner. Okay, before I get into the charts, I have to cover an extremely interesting news story that is not going to be covered in mainstream media. And no, I'm not getting political. I'm going to be talking about the fact that we've had a shift that's occurred in our budget, the United States government, all of us that live in this beautiful country, every last one of us. We have a individual budget. Then we've got a government budget that represents all of our joint spending. Now, in all of my lifetime, I've understood that the number one expense in that budget was the military. I remember back in the 80s, it was very popular to talk about the fact that we should be spending as much money on education as we were on the military. Now, I don't know if you guys have ever looked at the data surrounding our military spending, but I did. Back in 2000, I read some interesting articles about the fact that at that time, if you took all of the large global powers and you combined them together and you got the number that they were corporately spending collectively as a group, you would have to multiply that times 5, and that's what the United States was spending on their defense. Now, I'm not making any political point here other than to say we live in a very safe country and none of us are fearing our neighbors and we have a very strong military. But something's changed. We actually are spending more money in a new category that isn't defense. Is it education? No. We just surpassed in spending on covering the interest on our debt. So just in July, I mentioned this to you, and it was around $860 billion. Well, in just between now and then, we've crossed the $1 trillion mark. So annually, we are now spending officially $1 trillion just to cover our interest. And now I wanted to mention that because that's a change. That's something that we need to be talking about and that everybody needs to understand. The number one expense in our individual budget for most Americans is the cost of their home or where they're renting. Okay. Imagine if your credit card interest rate expense, just covering the minimum, exceeded the cost of your dwelling. Then you would know that you're in pretty big trouble and you would have a high risk of going bankrupt. Well, that's what a lot of people think regarding the United States dollar, is that it's got limited lifespan and that every day that that interest rate is climbing out of control and we're printing more dollars in an attempt to cover our bills, the rest of the world is getting prepared. How are they getting prepared? Well, in the form of the BRICS nations. Now, I know you guys have heard this before, or maybe you haven't. I've talked about it a handful of times. This is a new alliance of countries that are banding together to create a currency to compete with the United States. Now, I don't even think they're going to try to take the United States dollar head on. They're just going to wait for it to slowly die, and then people are going to, in their world, they're hoping that people will just gravitate right over to the use of the BRICS currency. Now, things that they're doing to prepare for this is they're accumulating gold so that their new currency can go back to the gold standard, which is something that the United States dollar used to be based on. But we got off of it, I believe, back in 1973, and the dollar's been running wild ever since. And so future growing economies like Brazil, India, China, South Africa, Egypt, UAE, and Russia, now Saudi Arabia, is currently looking at an alliance with the BRICS nations. There's 10 other countries applying to be members of the BRICS nation, and there's 10 others who've said by their global leaders that they would join the BRICS nations. And so I wanted all of you guys to be aware today that that this occurred in the news. It may not be the biggest topic that's being discussed. Right now, people are discussing which politician did better in recent debate. And I'm going to remind you what I said about that debate. Both of them are going to promise to solve your problems by spending your money. And that is going to put the US dollar in even greater risk. So I wanted you guys to hear that. I don't mean to freak you out. You might say, okay, Josh, I mean, what are you telling me? Should I, go off grid? Should I sell all my investments? No, I actually think that two areas of interest looking to put money is in U.S. stocks. Because at the end of the day, U.S. stocks are often run by good management teams that are held accountable from quarter to quarter. They now have a global reach because a lot of foreign money is invested in those U.S. big tech companies. It's one of the reasons why we saw big tech break away from the S&P 500 and continue to go higher and higher in 2023 and 2024. And so they're going to continue to be places where people can park money, and there might even be a flight from bonds at some point, because bonds is where we're going to see some trouble if the U.S. dollar were to collapse. The biggest hit that's going to be taken is U.S. bond holders. And you know what? They might be kept whole, but people may not be buying them and they may be selling them, and it could cause some problems. I'll get into that more in another video. Whew, that's a big topic. Guys, this is the Stocks with Josh. I can't remember if I said that already. Appreciate the like and the subscribe. Let's talk a little bit about my prediction on the SPY and NVIDIA, and I'm going to wrap up this video. I will timestamp this video so you guys can move through it. Okay, guys, we had this big, ominous red day looming over us. It established a floor at 540. It established a top at 550. We had two inside candle days. We slowly creeped our way up. Yesterday's candle was the candle that canceled the big red candle. And today we've done something new. Now I've drawn an ascending channel, and we have broken back into that ascending channel, and we are slowly moving back to all-time highs, our double top around 564. And remember, that's only bearish if it gets confirmed, and that would have had to be confirmed if the price were to have broken somewhere south of 526, 530. That never happened. We've bounced halfway before we got there. We're practically back up to 564, but this is the candle. And today we got a buy signal from the flare indicator. And if we can hold this price tomorrow and not fall back out of this channel, I would say that our odds of breaking and making a new all-time high this year has significantly increased based on today's bullishness. Now, I would expect some choppiness, perhaps. It wouldn't shock me if we had a couple days of choppiness before going higher, but I'm expecting an upcoming test of this 564. And here's even the more exciting news. If we can open and close some candles above 564, then yes, momentum has reset, volume can flood back in, and we could, between now and the end of October, make our way all the way up to 592. And you say, Josh, that's crazy. I thought September and October were supposed to be bad months. Well, like I said, when everybody thinks the market's going to do one thing, it can do the other. At the moment, this is a repeated technical confirmation of a V-shaped recovery. And yes, we're looking at the potential of a complete breakout. Now, here's what we need to watch for. Two things that we need to be watching as potential signals of this market turning lower. One, we break back beneath the channel, right? And you'll know that on this channel, I'll tell you that right away. If that occurs, I'll let you know if we're back underneath the channel. And two, if we lose this critical level of 540. Up here, we touched the 564 twice, and we may come back and hit it a third time. Down here, we've hit 540 2 times, and if we came back and hit it and broke through, well, then we've got to give up on the up move of this market this year. All right, real quick, I want to cover some news stories surrounding NVIDIA because I think it gives some perspective, and then we'll look at the NVIDIA chart. NVIDIA's stock extends gains. The time to worry is clearly not now. That NVIDIA and the chip makers and the AI narrative that people fear it's just too good to be true and that they cannot sustain the current level of growth and the current level of the up move. She says, yes, the numbers are so good and moving so high, so fast that investors worry about sustainability. However, the time to worry is clearly not now. While investors have been concerned about the prospect of Blackwell delays heading into NVIDIA's earnings report late last month, that issue appears to be mostly a nothing burger, according to Razgun, since the company can still see substantial revenue from the new chip lineup in the fiscal fourth quarter ahead of a likely massive ramp next year. So what am I hearing in her review is that she's looking and anxious to get a bigger position in NVIDIA because the AI story isn't over and NVIDIA is even going to be more dominant in 2025. Which is another reason I've been talking about this repeatedly, about the fact that we are going to deal with a recession, we are going to deal with a pullback, and we are going to deal with a slowdown. But it doesn't mean that everything is going to fall apart miserably. There's still stocks that are going to be driven by the AI story, which means that every single time these dip, it may be an opportunity to buy. That's how I handled NVIDIA in recent days. Everybody else was like, Josh, I'm not going to touch it till it gets under 100. Well, if you took that mentality, you've missed the current move, and we're all the way up practically under my area of resistance at 122. Let's go look at that chart. All right, here's the things I want everybody to keep their eye on. And here's the main story. I'm going to go over 3 facts in this chart that everybody needs to be paying attention to. We are in a decline, and we have been since June. So since June, we've been in decline, right? We attempted to rally above it. This was a very bullish moment. We didn't break up. We broke down. And the good news is that we actually made a higher low, which was very, very bullish. And I had said to everybody that we should be buyers of NVIDIA when it gets 32% below its all-time high. We accomplished that here. And I don't know that with all the bullish narrative going on with NVIDIA that there is much more reason for this thing to fall below that. It doesn't mean that it won't. Now, here's where the story gets a bit more interesting, and that's by us looking at the MACD. All right, so when we're looking at the MACD on the daily time frame, this is the signal line crossing the MACD line, and if that happens, we're going to see price absolutely explode. Now, what I like about it, now it is in bear territory, so we need to be aware of that. But what I like about it is that the momentum that is shown in this picture has clearly cooled off enough that if we want to go on another rip higher, we've got a lot of room to the upside. And so what we're watching for is that crossover. And there's 2 stages to it. There's the initial crossover, which would simply be these lines intersecting. But then there would be the increase of the momentum. So right now you see that momentum has been on decline. If we cross this momentum resistance line, it's going to be a much bigger confirmation that NVIDIA could actually go back up to 140, 150, 160, and even 170. And so those are the thresholds that we're going to be watching. NVIDIA, which has been the biggest SPY lifter, is going to participate if the SPY breaks out. And so I want you to think that if the SPY breaks above that resistance I showed you, I want you to imagine that that's going to very possibly bring NVIDIA to a point of breakout as well. We're going to watch those momentum indicators to know how strong of a breakout we might possibly get. And so what I'm doing with NVIDIA is I'm watching at the moment to buy the dips, but I'm not going to be stuck holding any bags. I currently believe that the stop loss on NVIDIA, for me, that would be safe, would be $106. I don't think that we should come back beneath that price point right now. All right, that wraps us up for today. Thank you for hitting the like and subscribe. I'm going to drop a class, like I said, in the Discord this afternoon. Come over there and check it out. That's the Chart Goat University. I think you're going to love the community. Come learn to chart, trade with me and the Crown Traders. We'll see you over there. Take care.